Hey folks, Andrew Packer here, and welcome to Trading Tips. One of the biggest investment events of 2019 has just come and gone. It's the annual meeting of Berkshire Hathaway, ticker BRK. And of course, it's the holding company for Warren Buffett's investment empire, and the A shares will set you back over $300,000. Because over the years, he has never split a share, he's never paid dividends, or at least hasn't in about 40 years. He's been reinvesting and compounding his wealth. Now, we've talked about Buffett in previous videos, but the annual meeting for Berkshire is an event unto itself. That's because, unlike traditional general meetings that you get from companies, this one is much more of a bit of a circus. It fills the entire stadium in Omaha, the Quest Center, with about 30,000 seats, the kind of thing you would normally expect at a sporting event that was incredibly popular. And instead of having just 5 to 10 minutes of going through all the dreary financial statements and taking that sort of thing, Buffett spends the entire day doing Q&A from people inside the stadium, from taking internet questions and questions from journalists about anything and everything. So this year was no different. He talked about everything from, Bitcoin to some of his investment holdings, to his succession plans, to what his investment lieutenants were doing. And there are a few key takeaways and a few ideas that I think generally merit some more detail and look like some pretty good investment ideas now. The first thing is actually an item that came out just before the meeting held after the market closed Friday, when word came out that Berkshire had taken a stake in a little company called Amazon, AMZN. Now, for a value guy like Buffett, it seems like Amazon, with its PE ratio of 80 right now, which sort of oscillates between making money and not making money, and its business as an internet retailer, which seems low margin in a lot of ways, well, it looks like it's a bit of an incongruent investment. So there are a few little details here. First, this was an investment that was made by one of Berkshire's lieutenants, not Buffett himself, not Charlie Munger, the right-hand man and other value investing guru at the company. But there was also an acknowledgement by Buffett during the annual meeting that Amazon actually ticks a lot of boxes that could be considered value. The company dominates the space that it's in, and for an area that doesn't necessarily have that much of sort of a moat or competitive advantage, Amazon has managed to build one with its policy of getting big quickly and getting into a space and dominating that space. And when you look at Amazon as an industry dominator, there is a value there that can and should play out over time. So that's a pretty interesting development, one that I think we're going to continue to see these kinds of companies continue to become part of the Berkshire portfolio. Now, of course, another technology name has been in the news with Buffett in recent years, and it's one that he made himself in what has become the largest individual publicly traded stock in the Berkshire portfolio, and that is Aapl, ticker AAPL. We've covered Aapl in another video recently with its event. They're just working on some higher margin opportunities and getting past sort of just coming out with a new iPhone every year. They're working on streaming technology. They're working on gaming VR. They're doing just all sorts of little things here and there that are going to help boost their bottom line just a little bit at a time. And for a company the size of Aapl, that's being able to, a 1% profit margin improvement can have a tremendous amount on its overall returns. So this is another area where Buffett's been able to take a little bit of a victory lap. Shares are up from where he's been buying them. So that's another interesting play, and it's one that ties in with a big name that's out there right now. And on a valuation basis, Aapl looks almost a little bit like a value play. It trades cheaper than the rest of the overall market. It's about 17 times earnings. The market's a little over 20. There's definitely an argument to be made there, and they're just going to continue to keep minting money for their shareholders and growing the dividend, and that's actually the kind of thing that Buffett would love to have in his portfolio. Finally, Buffett mentioned a company that's been struggling, and another company that we've also covered in a recent video, Kraft Heinz, ticker KHC. Because Kraft Heinz was the merger of Kraft and Heinz, well, one company usually has to overpay to buy control of the other, and they recognize this with a write-down. More interesting to me is the latest development that the company was going to restate some of their past financial statements in light of these write-downs. Usually when a company goes back and says, oh, hey, we need to look at our past financial statements and make some changes, the market says, hey, whoa, this is a problem. This is maybe not a red flag, but it's a very yellow flag. It's a warning. But in this case, the day that they announced it, shares actually ended up for the day. Now, shares have been trading in a flat range really in the past 2-3 months now since this announcement came out. So there could be a potential opportunity here. So looking at kind of all of these big stocks that have dominated over the past few weeks and coming out of the Berkshire meeting and getting Buffett's thoughts on these things, let's take a look at a little bit of price targets. Now, Amazon's getting pretty close to its all-time high again of around $2,000 a share. It's about $1,900 right now. But I think on a pullback, you could probably try and pick up shares around $1,600. I think that would be a good price and where you're probably going to be getting in at or lower than where Buffett's lieutenants were when they started buying into the stock as well. Apple's around $200 right now. I think if we get another little market pullback the next time, it's probably going to be in the 180, 185 range. That's an area where you can accumulate at a pretty good price that's close to where Buffett paid, maybe even a little better. And then for Kraft Heinz, you know, if you're buying shares or doing an options trade kind of at or under 35, I think you're at a point where you're definitely getting way less than what Buffett paid. And every few years, there's one or two stocks in his portfolio that just seem to just completely tank out of nowhere. Right now, this would be sort of, you know, the one that looks like it has the lowest opportunities going forward, so it may get the best returns. And of course, as for Berkshire itself, well, I'm not going to comment on the A shares. If you've got over $300,000 lying around, hey, you know, good for you. You know, you could still probably diversify with something else. But the B shares trade at a little over 200, and you know, I think at or under 200, which again, on a market sell-off, this looks like a good price to buy in and get a company that owns all of these pieces, and you're getting all of the operating companies that Berkshire owns, and you're getting all the investment knowledge of Charlie Munger, Warren Buffett, his lieutenants, and the fact that the company's sitting on over $100 billion in cash right now that is going to just continue building from all these investments until it gets deployed elsewhere and potentially results in a buyback. So buying Berkshire itself actually might be the best bet out of all of the names here right now. So that'll do it for this edition of Trading Tips. Until next time, I'm Andrew Packer wishing you good trading and good financial health.